Google just released their latest quarterly figures, and let's be honest, it was another good quarter, but the market was just expecting a little bit more. It was a small miss when it comes to cloud, and cloud has been the focus, especially when we look at Azure, Microsoft, or Google Cloud. And on Thursday, we're going to have that focus on Amazon and AWS. At the time of making this video, stock is down around 7%. In my opinion, this is again a buy the dip type of opportunity. I mean, I say in my opinion because I plan on buying that dip. I think Google Alphabet is still undervalued. You're getting also a huge call option on autonomous vehicles with Waymo. Whether you believe in that future or not, that's up to you. I do believe it, and I have shares of Tesla, I have shares of Google Alphabet, and I have also shares of Uber. Uber will report actually on Wednesday before the market opens. If you're interested in that, I'll cover that earnings report as well. But in this video, of course, let's focus on Google, the earnings report, and a couple of things that were mentioned during the earnings call. The AMD earnings overview is already live on the channel, so if you missed that, that's going to be in the top right corner. If you enjoy this type of videos, we'd really appreciate it if you hit that subscribe button. Earnings season is in full action. I'm releasing quite a lot of videos throughout this earnings season, so if you're interested in all of that, hit that subscribe button. We're trying to reach 100,000 subscribers. That would be a pretty amazing achievement. And you can always unsubscribe later after I receive, of course, my YouTube plaque, because not beforehand, please. Thank you very much. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So as always, major overview from Consensus Gurus on X. As you can see, a pretty good quarter, right? Pretty good quarter. And you're probably asking yourself, well, what about guidance? Guidance, Alphabet doesn't really focus that much on guidance. But for Q4, you can see, okay, gross revenues, small miss. But I mean, how small of a miss can this be? Extremely, extremely small. So not really a big focus. All the rest here were quite okay. If you look at cloud, that's a miss of 1.9%. Fine. It's still growing 30.1% year over year. By the way, Microsoft went down because it was also growing just 31% year over year. But remember that dollar number for Microsoft is of course much bigger than Google Cloud. But all in all, again, a very, very good quarter, generating 24, close to $25 billion in free cash flow a quarter. So yeah, quite astonishing. All in all, if we zoom out, this is basically what is happening with Google and all of its business segments throughout the last couple of quarters and years. Biggest chunk is still, of course, Google search and other revenue, and then YouTube ads continues to grow quite rapidly. The rest here, Google Network is the only one that has been struggling a little bit. As you can see right here, that's the orange part. We've got Google subscription, high margins type of business that is growing nicely as well. Google Cloud continues its way up. We can actually look at that more specifically. Of course, it started pretty small, right? 5 years ago, has grown at a compound annual growth rate of 35.5% and is now becoming more and more profitable by the quarter. With regards to operating income, of course, the majority still by far just comes from Google services. Then you've got Google Cloud and still losing money on the bets part of the business. Now, the small issue was, of course, this, right? We've seen Google Cloud has accelerated from the September quarter of 2023. So that was nice. Last quarter that grew 35% year over year. But of course, that's 35% on top of a quite weakish quarter. Now this time they're growing 30% on top of 25.7%, and the next quarters are not going to be that easy. The year-over-year comparisons definitely don't become easier from here, but this is one of the reasons also why the stock is down. But in my opinion, there is really no reason to panic. As for a couple of comments here from the CEO, Q4 was a strong quarter driven by our leadership in AI and momentum across the business. We are building, testing, and launching products and models faster than ever and making significant progress in compute and driving efficiencies. In search, advances like AI overviews and Circle to Search are increasing user engagement. Our AI-powered Google Cloud portfolio is seeing stronger customer demand, and YouTube continues to be the leader in streaming watch time and podcast. Together, Cloud and YouTube exited 2024 at an annual revenue run rate of $110 billion. Let me just repeat that for a second. Two of their segments here, cloud and YouTube, exited 2024 at an annual revenue run rate of $110 billion. And these are not slow growing segments. These are still quite fast growing segments. So yeah, I mean, it's just an amazing business to own. I don't really know why people complain all the time when they see these types of reactions. It's just an amazing opportunity. And the same with Meta. I've been saying that for months and months, actually, well, since the lows. So anyways, another big thing here was, of course, capex. We are confident about the opportunities ahead, and to accelerate our progress, we expect to invest approximately $75 billion in capex in 2025, which is more than what the market was expecting. Nvidia on that announcement went up a little bit. At the time of making this video, I don't know what exactly is going on, but Broadcom went up 3 to 4% because, well, Google has, of course, their own TPUs. Actually, Google does a lot of things in-house as well, data centers, building themselves, and all of that. They do quite a lot of things in-house, especially when it comes to their own personal workloads. They are doing things extremely efficiently, which is, well, one of their advantages over the rest. With regards to Waymo, they made tremendous progress last year, safely serving more than 4 million passenger trips. It's now averaging over 150,000 trips each week and growing. So again, great news. And yeah, by buying Google stock, you get Waymo included. With regards to DeepSeek, I'm not going to read the whole thing here, but I'm going to talk about the inference. So the proportion of spent towards inference compared to training has been increasing, which is good because inference supports businesses with good return on invested capital. That trend is positive, and I think reasoning models will only accelerate it as they scale up, and the inference dimension as well. This is part of the reason we are so excited about the AI opportunity. We know we can drive extraordinary use cases because the cost of actually using AI is going to keep coming down, making more use cases feasible. That's the opportunity space. It's as big as it gets. That's why you're seeing us invest to meet this moment. So in case you are wondering that, oh, DeepSeek is going to destroy everything else, no, as you can see here as well, these things are going to accelerate use cases. Moving on to a couple of extra things that were mentioned during the earnings call. So with regards to Gemini, they said the following: more than 4.4 million developers are using Gemini models today. That's more than double the number just 6 months ago. They said that they have, again, 7 products and platforms with over 2 billion users and are all using Gemini. That includes search, where Gemini is powering our AI overviews. People use search more with AI overviews, and usage growth increases over time as people learn that they can ask new types of questions. Also, circle to search has been increasing quite a lot. I mean, this is the power of Google as well. This is the power of companies that do have distribution, right? It's great that other companies are first movers and stuff like that, but Google, first of all, have, I would still call it AI leadership, great talent, great products, but what do they have? They have the distribution, just like Meta. When you can release products to billions and billions of people, I mean, that's a huge advantage over other companies that have to go hunt for users. Here, a new solution, a new program, something gets launched, bam, it's launched, it's updated, and it's been released to billions and billions of users. That's how their return on investment on all of that capex is going to pay off in the long run. With regards to circle to search here specifically, yes, search is still evolving. It has been evolving for years and years. That 10 blue links thing has been, well, I debunked it already last year. That thing has already changed for years and years. But here, circle to search, they said the following: we're also pleased to see how circle to search is driving additional search use and opening up more types of questions. This feature is also popular among young users. Those who have tried circle to search before now use it to start more than 10% of their searches. As AI continues to expand the universe of queries that people can ask, 2025 is going to be one of the biggest years for search innovation yet. And the last thing here, again, another positive thing, we do see and have been seeing very strong demand for AI products in the fourth quarter in 2024, and we exited the year with more demand than we had available capacity. So we are in a tight supply-demand situation, working very hard to bring more capacity online. As I mentioned, we've increased investment in capex in 2024, continue to increase in 2025, and will bring more capacity throughout the year. Does this seem like a bearish thing to say or a bullish thing? Let me know. And so lastly here, as you can see, it seems like we're going to open just above that 50-day moving average. The 200-day moving average sits a bit closer to $172. Are we going to get there? I don't know, but on the weekly, we are slightly overbought. Of course, with this reaction right now, I do believe RSI is still going to be high, but I don't think we're going to be overbought. Then let's see if the dip gets bought tomorrow. If not, of course, Amazon could still have a negative effect on these types of players on Thursday if they also say something with regards to capex or their cloud growth rates are coming down as well. So we'll see what happens, but in my opinion, in my eyes, nothing really much has changed here. This is still a tremendous company to own for the long run. So what do you think? Let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.